Welcome to the Silver Report Uncut. We have some very interesting things that are going on in the silver and the gold market. And I wanted to address something. First off, I at no point think that gold is actually going to be revalued to 42 Federal Reserve notes an ounce. Ever. Ever. It's not going to happen. In fact, what we've been watching recently is uncontrolled money printing going on all around the world. Now, this was something that's been going on since the 1980s, early 1990s. Greenspan began this. The U.S. money printing, it's been going on ever since Nixon closed the gold window. So the address of that previous show, and I would suggest that you go back and maybe listen to it again, was discussing certain prices from 72 because that was right after the United States removed themselves from the gold window, back when the price of gold was still relatively normal and the U.S. dollar was relatively strong. What we've been watching is a decline in the U.S. dollar. In fact, it's gone semi-Weimar Republic through 2008 and 2014, and we've covered the U.S. has exported its inflation with this strong dollar policy and just the reserve status of the dollar all around the world. That has been changing, though. We talked about the influx of low-wage workers through a lot of the underdeveloped world, and I say underdeveloped because there were people there, they had economies, but they've now really had this significant boom and change through globalization. But now, we're seeing that was just the Bank of Japan, the Federal Reserve that were printing money. It was no big deal. But now we're seeing, and somebody was comparing this basket of currencies, that the dollar is doing well compared to a basket of currencies right now. That the dollar is doing strong when the entirety of this basket of currencies, it doesn't weigh more than an ounce of gold. Secondly, gold is the number 3 reserve currency in the entire world. Gold and its power and its use as money can never be understated. In fact, it is significantly outperforming the U.S. dollar. Now, what we've seen is that the People's Bank of China, the Bank of Japan, the ECB, they have been printing money right now like they expect the world to end next year. So this monetary inflation, it's been contained when it was just a limited number of people that are doing it. But the world is now drowning in these printed fiat currencies, this basket of currencies that is essentially toilet paper wrapped up in a bow of every flavor. So price inflation is on the cusp of breaking out furiously in all of these currencies. You just simply cannot continue to devalue these currencies and print money on a vast scale. Now we're talking about in Europe, they're saying, from time to time you'll get these Bloomberg headlines. They're saying, Europe is looking great. They're having their labor look like it's picking up. They're filled with zombie banks. They have record high unemployment levels. They're not even reporting it. It's very similar to what's going on in the United States. There's nothing they can do about it. They're controlled by central bank interest. And on top of that, why do they continue the money printing? Why are they not backing off? And they want to fake out the world and tell everyone we're going to stop buying bonds. They continue to buy bonds. We're going to stop printing money. They continue to print money. And so this world that we live in is drowning in printed fiat currencies. And what that means, when the supply of money exceeds, say, the supply of donuts, eventually the price of donuts has to go higher. It's not possible for it to remain low. For a long time, this has been exported. What that will translate to would be a furious breakout in the price of commodities, especially physically deliverable gold and silver bullion. The reason that they will never be able to crush or to eliminate the gold price, number one, if the price is valued in Federal Reserve note dollars, there's no way to eliminate. They've been suppressing the gold and the silver price for a long time. They're not able to crush. They're not able to stop the value of gold and silver, especially because silver is a globally necessary element. So we see that as the continued increase in the money supply around the world is going on, in excess of wealth output, because we're not seeing any kind of growth from most of these countries, eventually prices are going to need to go higher. And we're at that point right now. And I'm talking about parabolic price increases. Now, I want to direct your attention to something, because some people will say, well, no, we're not really seeing any signs of that. We're not really seeing anything that would allude to that. And I wanted to address this 23,000 stock market Dow. 23,000. And now some people would say that's a good thing. To me, it represents a very, very unhealthy economy. A very sick and diseased, laden with sores economy. Because the value in comparison to gold, what it would take to buy the stock market using gold compared to what it is now, we are already in a stock market crash. We're watching the rapid depreciation of our currency so much that it's pushing stock markets, and they keep saying record highs, record highs, record highs. And everyone, and this shows some of the work that has been used against us. It's been propaganda to warp our minds into thinking that gold and silver is not money, and to believing that this basket of currencies somehow is worth something. All fiat monetary regimes come to an end. They always go to zero. And this entire basket of currencies is all flawed. It is destined to go to zero. Physically deliverable gold and silver bullion is of utmost importance, especially when true economic inflation is already manifesting itself in the global stocks and real estate prices. Now we look at this real estate bubble, this massive real estate bubble, and everyone wants to say, well, this is not a bubble. 2008 was a bubble, but this is not a bubble whenever the valuations are significantly higher. They look at the stock market and they say, well, this time it's different. It's going to go up forever. We should always be bullish. We're going to have 30,000 Dow. And it really just shows the devaluation that has taken place in our currency. All of that money printing that has taken place, and we say, well, where has it affected us in the general economy? Well, there has been a distribution disproportionately to the wealthy. They've had increase in wages, increase in wealth. The rest of the country, which is being divided into two parts, the owners and the don't own anything, we are on the losing side of the spectrum. Whenever they talk about global stock prices, now, hey, you have an E-Trade account, you get on there, you make a couple trades here or there, you have a little bit of extra bucks to spend. That's all right. And that's not what I'm talking about. That's not who really is benefiting from these stock market prices. The massive banks benefit, number one, above private investors. And some of these billionaires you hear about, your Warren Buffetts, things like that, of course they benefit. They're in the club. But on top of that, the average American workers, most people, I'll tell you what, they don't even pay attention to the stock market. They hear Dow 23,000, they say, great, maybe I'll be able to get a better job now. And they're thinking about filling out applications. They're thinking about getting to work. They're busy, moving, breaking their back just to try to be able to hold on. But we're seeing that, they're running out of places to live. Real estate prices continue to go high, so this inflation is already manifesting itself in our economy. That is because the global economic system is reaching a tipping point at which the rapid accelerating price inflation is about to emerge. This stock market is sick, and it shows a very dangerous thing that has happened. Because the valuations, these companies are sick, they're not doing well, and most of it's stock buybacks. But besides all that apart, the fact that the consumer is tapped out, credit is due to max, there's nothing more to spend. These valuations are valued in 2017 dollars after rounds and rounds and rounds of money printing. So that price inflation combined with inexorable and severely negative real interest rates, it functions altogether as a precious metals rocket fuel. And as I've said, that we are really seeing, that everyone says the everything bubble, but we've not seen gold and silver in that bubble as of yet. Currently, commodities are extraordinarily undervalued relative to the Dow. In fact, going back all the way to 1917, there's only two prior periods when commodities were extremely undervalued versus the Dow. That was the late 1920s, early 30s, and during the 1960s. Both of those times, the US dollar was significantly devalued versus gold. Like in 1934, FDR revalued the price of gold by 75% versus the US dollar, from $20 to $35. Since 1971, the dollar has lost 80% of its purchasing power against this, basket of generic currencies. In 1971, it took $35 to buy 1 ounce of gold. Today, it takes 1,271 Federal Reserve notes in order to buy 1 ounce of gold. Gold has not changed. We've watched the depreciation of our currency, which is also making the stock market appear as if we are doing the best that we've ever done. That's what they say, record stock market prices, that we're doing the best that we've ever done without any actual change. In fact, we've watched a rapid deterioration of our economy. So that's a 97% decline in the purchasing power of the dollar versus gold in that time period that we illustrated yesterday. The last few percentage points before a fiat currency completely collapses and falls to zero. And, this is eventually going to happen. It is without cause. It's not if, but when. It will produce the biggest nominal price rises in gold. And if you stuck through that video yesterday and you saw some of the marks that we're discussing about the German mark, and what it took to buy an ounce of gold. You know, at one point it was 100 German marks you could buy an ounce of gold. And what we've seen, and that was in 1922. By the time it was 1923, as the mark continued to collapse from all of that money printing, and finally all of that money printing came to roost, we saw that an ounce of gold was worth 100 trillion marks, and people were shoveling it onto wheelbarrows, and those were some of the images that were there yesterday. So I suggest you go back and see that video once again to get the full point. But they were taking wheelbarrows filled with German marks in order to go buy goods or services. Ultimately, this is the direction we're heading. Weimar Republic style. There is simply no way to manifest this much money, and as if we're not seeing it now, this extremely sick 23,000 point Dow, this extremely sick escalation in real estate prices, escalation in credit all around the United States, and to say that things are doing well, I think that we need to reevaluate our definition of well and value it in gold. All right, thank you guys for joining us here at the Silver Report Uncut. If you like the content, be sure to subscribe, like the videos, share the videos, get the word out. I thank you so much for stopping by. As always, stay safe.